Hey everybody, welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Yeah, so pretty predictable day yesterday. Pretty good run up and down of those ranges, showing good stability above 25. A little surprise there, a little nice finish just below $27. We're going to be thinking about what we can expect going into the end of this week. We're continuing to think about some of these catalysts we might have coming up. Continuing to monitor some of the key metrics here with respect to our current volatility phase in this current GME price cycle. So let's hop into it. First up, we have our gratitude for today. Today's newsletter is brought to you once again by Jimmy Perp, as well as this video, right? As well as our monthly contributors, Dat Scruffto, Ken Wedmerland, and Not Medical Advice. Many thanks to them and to all of you otherwise who have supported the channel and will support the channel going forward. Many thanks. So today we got a very interesting tweet from, or I should say yesterday, from Ryan Cohen that was also deleted. Very cool here with the Trump tariff battle royale. One of the things I wanted to point out here that stood out to me, I know that there's some suggestion about something to do with the UN. There's like a hidden couple of numbers here, Trump's belt, something like that. But what I found very interesting is that the uniforms, right, the China uniform and the US uniform for this UFC fight are actually swapped on Trump and Xi Jinping here. So when I saw this, I immediately thought, oh, hey, maybe these CHWY swaps are going to come into play. Maybe Ryan Cohen is saying something like that. We got another 69,420 built in there. So yeah, if we scroll down a bit here, this is a bit of a snippet from Metro Ballin's swap data here that he has compiled here as you can see, into a spreadsheet. Right, and so we do have, I think this one here, is this the same? Is this modified? No, I think these are different, right? These all end up, no, this was modified. Yeah, this was modified. Interestingly, right, coming up tomorrow, we have a lot of notional value. So we have this 26 million or billion, don't know how this is actually priced. Is coming up due tomorrow. And then on the 17th, we have, on April OPEX, we have a lot of notional value there on these CHWY swaps. Now, this was a swap that looks to have been entered into this year. So this was a swap. This is a very short-term swap. This is like a little 3-month swap that was just opened back on the 16th of January. So this was very interesting. We do have, right, so we have this notional value going back to January, that's coming due on the 16th. This is all related to these swaps that were modified. So we have some these are back from January. So this is during the sneeze, right? January 2021. These were modified back on the 23rd of September of this year and then on November 19th. So really big notional value here. But these, right, this bigger one, this 100 million or billion, I'm not sure exactly how this notional value is measured. I haven't found someone that's been able to suggest significantly or meaningfully otherwise. But it's a lot, right? It's a lot. If we look at, say, the GameStop swaps that we saw, those were in similar denominations. I don't know why. I mean, I suspect that this is billions of notional value, not millions of notional value. I mean, millions of value, I suppose, does matter. I mean, 100 million is pretty big, but I'm not sure why that would, make the stock go super critical, unless really, really, really short liquidity behind the scenes is super bad. Hard to say. I don't really, like I said, I'm not certainly not an expert. I'm barely even a novice with respect to swaps, but there does seem to be a high correlation of negative price events, of downward price events when we have large notional values of GME swaps. And certainly in November and December, it seems to have been the case that we had a long period of upward price volatility, big days to the upside that coincided with CHWY swaps. And it's possible, it does seem potentially likely that Roaring Kitty was suggesting that there was somehow a basket swap, something of the like between CHWY and GameStop. So hard to say for certain, but it may be that Ryan Cohen, I mean, that's what we're going to get, right? It may be that Ryan Cohen is suggesting that we might be seeing some big price action here with respect to these swaps. It's the only thing, I guess, that makes sense as a potential catalyst with respect to this 420, right? So there's this speculation regarding the 69 420 time you cover, like this is the period of time you have to cover your short positions because then something is going to happen around the 20th, right? I guess so. Yeah, the overnight market will open at 8 p.m. on the 20th. So that'll be Easter Sunday. So I don't know. Is there, like, once these swaps expire, see, this is the question. Is it so much? Is it so much that what is driving price action is the swaps themselves, or is it the hedge to these swaps, the closing of the hedge to these swaps? So if there's some sort of swap, maybe that is, a swap that's short, I suppose it would be, no, if it was a long swap, that long swap would be hedged by the counterparty with a short position or something like that. Or if it's a short swap, if a party has a short swap, the counterparty is long that swap, and therefore they hedge that position in order to remain neutral with respect to it with a short position. So the swap expires, you have the re-exchange of equities and dollars, right? If it's a total return swap, right? That shouldn't ostensibly affect the actual price of the underlying, since nothing is occurring in the lit market to make that happen. What seems to be the case, what actually drives price action related to a swap is either, okay, if like a short party can move the stock down because they need a better benchmark, right? They need a better price shown for the underlying in order to mark their swaps, right? Get a better whatever the particular rate is. But right after a swap expires, what causes movement back to the upside? Well, I would imagine it's something like the counterparty then that has this swap now off their books. So the writing party maybe of the swap now is done, right, with this position. Now it's time for them, like if they're long that swap, they have a hedge, they have a short hedge. Now it's time to close that out. And how are they going to do that? Well, they got to go out and buy the shares or something like that. So not exactly sure what dynamics are going on there, right? Continuing to try to develop my understanding of this going forward. But we have these pretty conspicuous numbers coming up tomorrow and Friday. So, or I should say Thursday. We're on a short week this week. Maybe we see some fireworks. And maybe the memeing about 420 will come to fruition here. So very interesting. Yeah, we're still very firmly within our volatility phase. Actually, what I wanted to point out, I noticed this today. So I wanted to start here with respect to our implied volatility. And what I noticed here, right now that we've had some time for this phase to unfold a bit, is I wanted to point out something that is very noticeable on our Schwab composite IV. So what I have gathered, I should say, the way that Schwab takes a look at its IV is it always displays IV30, but it always displays, whenever you use the implied volatility study, it takes all of the implied volatility values across all current open expiries on a particular security, and then it will compile those and then produce a composite value. So for example, here, right now, if you take all of the expiries, if you take all of the implied volatility values across all of the current expiries, so something like this, right? If you take out these values, I think I've done this before in the past. If you take all of these values, combine them all, and then average them out, it should come to this number, right? It should come to whatever Schwab IV implied volatility is showing at that moment. Okay, so how can this be useful to us? Well, okay, you can go week by week, and that's going to tell you more about how much of the extrinsic value in a given contract is amplified based on Vega, right? So the actual implied volatility coefficient that's in the options pricing equation. The Black-Scholes-Merton equation is vega, so that's what measures the implied volatility, which is important for calculating the VANA. So that's going to either increase or decrease the delta based on how high that value is. However, there's an additional component that's very interesting here, and what I think is important to note with respect to GameStop is not only during these implied volatility periods. So, right, we've talked about liquidity cycles, volatility cycles. User Gherkinit over on Reddit has a write-up called "When the River Runs Dry" that has a very good sketch of this dynamic. Right, I suppose one of the things that I've been trying to understand over the past few months, basically since we moved through this phase, like I would say personally, right, those of you who've been with me for a while, what I was trying to understand was, from the summer was, all right, am I really seeing the signs of we're going to see something in November, December? What does that actually look like going into it? Seems like Roaring Kitty is sending us some signals here. Can I read price action and forecast our movement basically into that? And the answer was yes, right? Was able to do that. But then as we were coming to the end of that, it was like, okay, where do we go from here? And I've been trying to understand now, and those of you, of course, who have been in the doldrums, right, who have been sticking it out with the channel and with what I've been writing and trying to understand over the past few months, has been, all right, well, how do we figure out the transitions between these cycles? All right, gotcha, we're able to recognize that. We recognize the volatility cycle coming to an end in January, but didn't quite get, right, and I'll be the first to admit this, didn't quite figure out when the day of the transition period was going to occur. It certainly wasn't easily visible in the same types of technical indicators that could have been used, that I did use in order to figure out, all right, yeah, we're going to start moving higher, and how to trade that move higher, which was largely pretty technically sound. It was very easy to use our options data in order to figure that out. Not super easy, right? The liquidity phase is way harder to figure out in terms of how do you trade that. But one of the things that I think I expressed to people and I've talked about on my live streams, just based on what I've seen in terms of, okay, how do you approach, say, short options, trading short options, so cash secured puts, especially covered calls going into these phases. One thing that I noticed, I was like, man, just kind of figure this out instinctively, or just by kind of looking at a week-to-week basis or a monthly basis, or just kind of going by aspect of options pricing. It's like, all right, I don't know how long, say, this liquidity phase is going to be. So let me pick something. Let me ballpark. Let me do a month or 2 months or something like that. Let me just ballpark something out of the money call, cover call, just to protect some portion of my position to the downside. So when we finally do bottom out, I can buy on the way down. I've got cash to buy on the way down. And then when we come back up, there we go, right? Because of course you have confidence in the investment. Certainly, I have confidence in the investment. Yeah, we're gonna go back up. This thing can't go to zero. Certainly not with our cash holdings. But what's very interesting that I notice here is if you look at Schwab. So if you look at Schwab's IV here, you can actually, and I've underlined this, you can visualize not just change in IV, right? So not just elevation of IV, right? So yes, down, up, right? We can see this, but we can also visualize this kind of chop. So if you look here, right, look at this kind of chop up and down. But here in our liquidity phase, right when we started getting shorted on the 13th, look how this is marked. Right from here to basically just before earnings, much flatter, a lot less chop. Now there is some chop back here in this phase. This is basically our earnings mountain, our 2-week earnings lead up, and then the cool off. But then, yeah, we kind of go back into this period of very limited chop. This, I think, is the 20th. This little bump here is the 20th. But then very, very flat, right? The chop is diminished. So the peaks and the valleys kind of even out. So what this is demonstrating not only a difference in the actual composite implied volatility levels, but a shrinking of the rate of change of implied volatility. So what this means is that in these elevated volatility periods, not only are you buying and selling contracts that are going to have marked up premiums, you're going to have much larger options contract premium shifts on a day-to-day basis. And this is based on the rate of change of implied volatility, or the rate of change of Vega with respect to the Black-Scholes-Merton equation, which is represented by the fake Greek letter, right? It's not a real Greek letter, Volga, which measures the rate of change of Vega, the rate of change of implied volatility. So what's really interesting is to be able to come here and see these heightened volatility periods are not just higher levels of implied volatility, but higher levels of the rate of change of implied volatility as well, which makes, see, this is the thing that really can draw in volatility sellers, because this makes sort of diving in and out of covered call or cash secured put positions, short options positions on a day-to-day or even a week-to-week basis a lot more fruitful. So looking at these kind of rates, because the peaks are happening kind of in intra-week. So you can sell an options position here, and it's going to be very, like, you're going to make a lot of money here, but then before you come back out. But you want to exit it down here somewhere so you can re-enter here. This period, you basically want to get to the end of the volatility period. You want to see when you're going to kind of transition out of this, so you can sell basically something way, way out here, right? You want to sell something way, way out here, maybe even go a little bit in the money, but you want to make sure you've got implied volatility working for you on this type of trade. But then, because you just grind, like IV instantly falls off a ledge in the period of a week, 2 weeks. We got a little bit of a bump up here, but by and large, you couldn't really dive in and out of contracts very well. It was just wait and grind, wait and grind, wait and grind, and then the price ground down with it too. So you didn't have a lot of fluctuation with respect to the contracts. I mean, entering something was probably better than nothing in terms of giving your position some protection to the downside. But really, that's the type of trade that you'd be prioritizing. And so then you prioritize that trade. Everybody's just kind of sitting and waiting for these options to decrease in value. Move out of that, take the cash. Then, okay, when you see something like this, you can move into longer dated options and then play this back to the upside, and then trade your short options on a week-to-week basis coming into here. So that's more or less what I did last year, going into this period, coming out of this period. Because we had earnings here, it was a little different than this huge stretch. I remember I played kind of monthlies up to starting the appreciation here, and then did monthlies here to here, and then entered into long calls to capture this value in these kind of early October weeks. And then here, holding the long calls and then trading sort of weekly options, right? Just traded weeklies, and monthly cash secured puts, I should say. That's what I was doing in this period. And then here, here then I actually just went to kind of mid-February, and then I re-upped a little bit on our right around here when we started moving to the upside, re-upped for March, right? So, but maybe next time I think I'd try to. It's nice if you can figure out this whole arc. You can figure this whole thing is going to happen. And it seems like we did get kind of a suggestion from Ryan Cohen on that, from Roaring Kitty, perhaps. 12:30 right here, we got the suggestion from Ryan Cohen that the next kind of significant date of news was going to be on the 26th. So we got kind of one more move up here. Anybody who sold, covered calls in here just made for March made bank. So yeah, just very interesting. But I wanted to point that out because this is the first time I've seen that dynamic, that Volga dynamic, really come into play. And it's this particular dynamic, this rate of change of IV on top of the elevated IV levels that I suspect are really what makes GameStop's volatility particularly appealing as a product to be able to sell to institutions and to be able to raise money from with these at the market offerings and with the convertible bonds. More so, I think, the convertible bonds. But in any case, very interesting dynamic there. I see no reason to suspect that this would go away. We have restricted liquidity here in XRT. We've got this weird pattern where at around 7:15, between 7:15 and 7:30 a.m., XRT will go from 800,000 down to 90,000. So 90% liquidity reduction. Here we've got like a 97% liquidity reduction in XRT. So these shares, these units look like they are being used for settlement purposes. GameStop liquidity, though, it does modify, like it's being used, but it's not being used tremendously. And we did see something like that on the first half of our move up in November. So we basically moved up. We were around 3 millions kind of in August, down to the 2 millions. We were kind of in the mid 2 millions heading into mid-November, late November. And then that liquidity then was used, that lending liquidity was used to really crush the price back just after Thanksgiving. So principally into December 2nd. A little bit more of it was used along with some strategic order flow rerouting into the 5th. And then something, right, Roaring Kitty came back on the 5th, and whatever was going on in the background there kind of knocked us back up into a sort of second phase of the volatility cycle, and then we sort of moved into the 30s after that point. Shares outstanding down a little bit on XRT. This was fairly typical and in line with what we saw back last April and last May. They sort of dwindled down a bit. They didn't get super low. There was a bit of institutional redemption here, and then into Roaring Kitty's like actual return, they shot back up again to that 9.7 million number. So cool to monitor this and see if we continue to see. Just cool to keep our eyes open and see what happens here, and see if this is some sort of strong correlation with a move like we saw last year, even if it's not quite as dynamic to the upside. Interesting to keep our eyes on. Price action, fairly normal, right? I think I mentioned this in the introduction. Bouncing around our key gamma levels here. This historical mark showed back up. This was a price level that we tested. I think it goes back to like 2023 or something. It was a historic resistance point or support point and resistance point. I think it was a historic support point in 2021 and then a resistance in 2023. And then it showed back up again in November of last year as a support, and here we see it being used again, this 2568 level. So moved down immediately off the open, bounced off 26, right? So bounced off about 26. So that call dominant position there, shot back to the upside, bounce off 27, move back down, bounce off 26 again, and then move through, go to this historic level, and then we got bought back up. A lot of call buying toward the end of the day, pretty heavy bullish flow picked us up, even though we were kind of neutral bearish on the day. Nothing too interesting in terms of our options activity, at least for this week. I'll do some more scanning today, see if I can't pick up anything for some of our future expiries. We mostly got profit taking and in the money call strikes. This was a mix of short and long volume at our call positions here. 30 was a little bit biased. We have a huge position there. I'm going to be very surprised if we see that expire in the money this week or anytime soon without some crazy buying event happening in the background. And even then, still no. I mean, I do not see $30 closing in the money this week based on how many calls we have there. 40,000 is a lot. This was a little bit slanted toward the ask. Puts were mostly at the ask. They were slanted toward the ask. So in the short term, more or less, it seems like the options market is kind of betting on, let's take some profits on volatility here. Maybe we can do some pretty predictable option sales going into April OPEX. 30 seems to be a pretty safe strike. These kind of upper 20s likely also seem to be pretty safe given how large they are. They're big positions. 25 in terms of gamma is a little bit less supportive. It's still supportive, right? It's still equal in its valence, equal in the hedging support we can expect there with respect to these other positions below 30. So, I mean, that's still looking good. This is still a fairly stable trading range. It is not as supportive. We did see some profit taking there, right? But I mean, it fits with the pack here. It fits with the pack here. More or less, the options market is saying we're going to trade in this bracket. We're going to trade between 30 and 25. Maybe the options market maker, if these swaps don't affect us now, if the sort of de-hedging from the swaps that I think might actually be that kind of buying catalyst, if that comes in beginning of next week, right? So after 420. if that kind of gets de-hedged over the weekend and then we just teleport up or something on Monday, like the risen Christ, then we might, we might see some kind of fading off, kind of to the downside into the end of this week. But still looking like, we'll probably be trading within that range. 25 to 27 is most likely. Doing anything interesting pre-market right now? No, not really. Kind of hanging out around 27. So, I think I'm probably most interested in terms of seeing if these CHWY swap dates can continue to tell us something worthwhile going forward. If we see something, let's say, if we see something before, if we see the 16th and the 17th be particularly bullish days, I think there's probably some good evidence that the dates of these CHWY swaps themselves are significant. If we don't, but then we see, like, say, a price teleport up on Monday, then that would tell me something like the de-hedging of those swaps is what's more operative, or what was operative back in November. So very interesting to see how that actually all unfolds. Hopefully some of this discussion of this Volga dynamic can be helpful to you guys going forward. Anybody who's trying to say, get involved with these high probability trades on the short side of the options chain, which work out way better, right? We can talk a bit more about that during the live stream this week. Looking forward to it. So good luck out there, everybody. Let's continue to see what GameStop has in store for us, and let's see if Ryan Cohen. Let's see if this read of this meme, right? This read of this Ryan Cohen meme, as pertinent to the swaps, holds water in the days to come. So, good luck out there, everybody, and we'll see you tomorrow.